Hi everybody, this is Osprey from MyChartCoachCom, and in this video I'm going to show you how we use the charts to time the entry and exit points. And so on this chart here is for Intel, and you can see here what we were doing is timing the bounce on the pullback here. It had formed 6 red candles in a row, and on the 6th it had formed the 7th red candle. And so the strategy was to play this 100-day simple moving average, and so taking a starter off of that level because it was hitting a key support level was the first entry, and then what we were looking for was the 15-minute chart to turn bullish. Always keep in mind it is risky to load before the 15-minute chart it starts a new uptrend, and so basically forming 6 red candles in a row, and then the 7th red candle was forming here. It was setting up for a really good bounce play since it was hitting this 100-day simple moving average, and on the this is a 15-minute chart. What we were looking for was a break above the middle Bollinger Band, and so here's the 6 over here, and so here's the big pullback, and then it hit support down here. This is the 100-day simple moving average support zone, and it came back up and it hit the middle Bollinger Band. So it wasn't signaling that it was in play yet, but hitting this key support level was a signal if you're trying to play the bounce that you could take an entry point, but it was very risky because the chart had not turned bullish yet. And then the key candle was right here at 2:30. That close above the middle Bollinger Band. That was a signal that the chart was heating up, and that it looked like the bounce play was starting. And to take a starter, if you didn't try to take one here, if you took one here to add to that position, and so the candle started riding EMA 4 support higher. That was a signal the bounce play was running. And then what we needed to see was a break above this 50 simple moving average. That was this candle right here, and the break above on the 50, that was a signal that the bounce play was continuing. Okay, and many times what we like to do is wait for that break above the 50 simple moving average on the 15-minute chart to enter to signal that the chart is setting up in bullish. You can enter when it breaks above the middle Bollinger Band, but keep in mind that is a early entry point, and if it drops back below the middle Bollinger Band, it's best to exit because it's a signal the chart's not quite ready to go. Similar to up here where the candles got above the middle Bollinger Band, it hit the 50 simple moving average and pulled back, and then the big drop followed. And so this got above the 50, and then the next key level to break was going to be the 100 simple moving average. And so notice here that the candle started topping out just above that level, and so the big break, not the big break, but once this breakdown started happening here, you can see the EMA 4 is the pink line. Once that started breaking down, that was a signal to lock in some gains. So it made this nice run from down here around 43 all the way up above 46, and then it started stalling out. Notice you have the 300 and 200 simple moving averages just above, and so breaking down below EMA 4 on this candle at 12:30 was a signal to lock in some gains if you didn't do it at the 46 level. And then once it broke below the middle Bollinger Band and below the the middle Bollinger Band and the 100 simple moving average, that was a signal the chart was breaking down on this candle right here, and so that was a signal to lock in gains if you had not locked them in already. And so notice how the 100 simple moving average was having a hard time turning that into support on these candles here, and that this dotted purple line, the middle Bollinger Band, turned into resistance. So this action right here was all a signal that this was struggling to turn this level into support. And if you look back here on the daily chart, you could see what happened was the candles had come up. Okay, so if you look here, the candles had come up and it hit the EMA 4, 8, and 13, and so in order in the middle Bollinger Band, in order for this to be a bullish setup on the 7th, it was going to need to close above all those levels, and so pulling back below those levels, forming the upper wick. That was a signal the chart was breaking down. As you could see, it was up here at 46, and then it pulled down below, and then this last candle of the day. Okay, so it dropped down below the 100 simple moving average. So if you didn't exit up here, you know, this was your clear signal that the chart was breaking down and cooling down. It was possibly not ready to go, and to head to sidelines, lock in those gains on the entry from over here from the day before. And then you had the next day, the chart did fully break down on this opening candle. It closed below the 50 simple moving average, and the downtrend continued. If you look over here on the daily chart, you can see that the top of the candle failed to break the middle Bollinger Band and EMA 13, and that signaled the top, and it pulled back. So basically, you know, this was a very short trade, but you know, the charts were signaling, you know, that this was the time to enter on the break above the middle Bollinger Band or off the 100-day simple moving average on the daily chart. And then once that 100 simple moving average failed to hold, that was a signal that it was breaking down. It's always the drop below EMA 4 that is your signal that the chart is cooling down, and it's a signal that you know, to lock in gains, to look for that reload lower if support holds, or just to go to the sidelines and wait for the next setup. Okay, so here we can look at Apple. Okay, so for Apple here, we were timing this bounce here off of the 200-day simple moving average, and you could see it pulled back, and it hit this level on the 5th. And so the strategy was, since RSI on that day was below 30, it usually bounces when RSI gets below 30, and the 200-day simple moving average is such a big level. And this is before you know, the markets like completely crashed, and so it was looking like it should bounce off of that level. And so if you look here on the 5th, what happened on the 15-minute chart is, at the beginning of the day there was a rally, and it suckered everyone in. And as you can see here, they ran it at the beginning of the day, and it got above the middle Bollinger Band, and you know, hitting that 200 simple moving average, that was an entry point to take a starter. And you know, it turned out that they pulled it back immediately, and so it was like, it turned out not to be the best call. It got back above the middle Bollinger Band here, but failed to hold that level into the close, and you could see it broke down. You know, it sold off into the close, and then the next day when it got back above the middle Bollinger Band, that was the signal that it was heating up. Okay, so it was the move back above the middle Bollinger Band in this candle, signal that it was in play for a long trade. As you could see here on the 6th, this white candle was forming. It started, you know, it started the day very low, down at 154, and then when it got above that 200 simple moving average, it started forming a very bullish candle, the bullish engulfing. And so if you didn't enter the day before on this pullback trying to play that 200 simple moving average, it was technically the best thing to do is to wait for this setup here for the break above. And so that break above the middle Bollinger Band was a signal that was heating up. And then on this candle right here at 2:30, that break above, that close above the 50 simple moving average, that was your signal that was ready to head higher. Notice how none of these candles closed above that level. Finally closing above was your clue that it was ready to break out, and that's exactly what happened. It ran up to the next level. And so what happened was, at the end of the day, it closed right at a double top level with the 5th. Notice how it closed right at the, you know, the same zone where it had hit resistance the day before. So it pulled back, came back up to that level, and so this was the signal to lock in gains. Okay, so because it was right back at that level, didn't know if it was going to reverse or not, but you know, that was you know, for a quick trade, if you were in the Friday expirations, that would have been a good time to lock some in, because it was bouncing. Now, it did break above that EMA 4 on the daily chart, and it looked like it was possibly going to have another white candle form. When stocks or when candles are forming below EMA 4, notice how all these candles are below the pink line. Once it finally closes above, that's the signal to enter that it's possibly ready to head higher. And so it was looking like that could happen here with the close here on the 6th. But you know, because it hadn't broken down, it closed above resistance. The chart was set up, but it was at a double top level. It needed to break above that 162.5 level to head higher. Well, the first candle of the day on the 7th did not work out well for the bulls. It did not break above resistance. It actually dropped below the 50 or the 100 simple moving average, and that was the signal to lock in gains. And notice how that level turned into resistance. It failed to break the 100 the entire day. And so if you didn't lock them in here at the beginning of the day, if you were in this trade and you were looking for more upside and it didn't happen, happened, you know, that first candle was telling you, okay, the chart's breaking down. And then when you had the 100 fail to break here, it was as a clue that like, okay, this is not happening today. This is resistance. I probably should lock them in, head of the sidelines. And then you had the middle Bollinger Band break, and that was the full breakdown. You had the 50 simple moving average break. These are big red flags right here that to be on the sidelines or be shorting the stock, buy puts as opposed to calls. And then you can see the chart ran back up. This candles ran back up to this descending resistance line. And notice how this line failed to break for multiple days in a row, for 3 days in a row. Even the last candle of the day on Friday came back up to that same descending resistance line and failed to close above. It pulled back below. So it's still that same resistance from before that it's failing to break, that descending resistance line. Once it finally breaks above that descending resistance, that'll be the signal that it wants to head higher. But for this Apple trade, it was really tricky because they sucked everyone in. It was at a key simple moving average on the daily chart. It was heating up here. They dropped the floor out. They really got it going. It was up 4% on this day when the markets were under pressure and it looked like it was going to follow through. And the next day, the bears attacked again. So this was really tricky. Yeah, but if you followed the charts, you know, they were telling you to head to the sidelines once this chart failed to break resistance. If you didn't get, you know, exit below this 100 simple moving average, that break below the middle Bollinger Band was your clue that it's not going to happen. It's not going to head higher, and there's downside risk. Okay, so yeah, this is, you know, how we use the charts to time the entry and exit points. You know, the key is to always follow the charts. You know, the chart is the best when the middle Bollinger Band and the 50 simple moving average turn into support on the 15-minute chart, and then the candles stay above both levels. That's when you get a very strong uptrend. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at MyChartCoach.com and our YouTube channel at MyChartCoach.com. I'll post a link below the video. Thank you.